In this video, we are going to be analyzing C3.AI. If you want your own stock analyzed, throw that in the comments. We'll get around to it when we can. Now, what we can see, we're currently sitting at around $26. So what are going to be the key targets, support and resistances from here? So as always, we go onto the standard deviation channel charts. On the left, we have a 6-month chart. So again, be paying attention to that. And on the right, we have a 1-year chart. So again, just for reference, those are the charts we're looking at. And again, obviously the 6-month does have after hours and pre-market data included. Now, currently sitting at $26. What are those key resistances? So $29 and around 20 cents and $29.40. This is our first deviation on the 6-month and also our second deviation on the 1 year. So when we come into here, this is really becoming quite overbought and really an area where on AI, we start to potentially look to play a reversal. So on the 6-month, again, not extremely overbought, just becoming a bit too overbought, but on the 1 year, becoming to that area where it is pretty overbought. So what that really means is, again, looking at it, short bias coming into this area. And this is why we avoided this 24.50 as a short bias level, and you can see that would have failed. And what we do is we wait for the 6-hour and the 1 year to both be at least one overbought area. And we can see that will be our first overbought area on the 6-month and our second overbought area on the 1 year. So to me, a high probability case that we will start to pull back from this area. And again, the way I tend to trade these is when you come into this level, 9 times out of 10, you get that pullback. So, you know, coming into probably 27.50, this is where I'd probably be looking to lock in some profits, moving my stop to break even. So even if we start to go and continue back up, we break through, we can lock some money in, move our stop to break even, so at least it won't turn into a losing trade. If it does continue to overall kind of continue to pull back, we will start to lock in money and probably be out by around $24 because that is a statistical mean on the chart. So that's what I'd be paying attention to as a target, and that is that short bias range. Now, if we end up breaking through this range, meaning we can't break above it, come back to test it as a support and it holds, then to kind of confirm the hold, usually I just wait for the break of that previous high created. And if we can break that, then we could most likely continue the direction to our next deviation, which in this case would be around $34 to around $34.60. And again, this is statistical mean then between the third deviation on that 1 year and second deviation on the 6-month. Now, this is a really high probability area where we start to reverse. We saw it on AI before. You can see we did see this at about the 31st of March. And we can see we're coming back to test this once, or potentially test it once again. If we do, this is really a short bias level to me. And the reason for that is if we come back up to this level again, what we're hitting is that third deviation on the 1 year. Now, if you understand standard deviations, you should know 99.7% of the data trades within these green lines, so the third deviations. Again, that's never going to be 100% accurate. We are trading the stock market, but it does tend to hold up quite well. You don't tend to see stocks trade outside of those ranges, and even if they do, it's very short-lived. So if we start breaking up to those kind of highs, again, that's really where I personally like to get. I'm getting in quite a strong size to play a short bias. So again, I do want to put kind of that disclaimer out there as well, is if we do start breaking up, $34, I will probably be opening a position and I will be playing that short bias. If though for any reason we did break through there, we would have a final resistance around $40, which would be our third deviation on that 6-month chart. So again, this would be a really high probability reversal area as well. But again, I don't really think we'll even break it that high, considering again, we got the really strong level here. But if we did, again, always like to be prepared. That's what I would be paying attention to. So those would be those key resistances on AI. If we're looking at supports, what would I be paying attention to? So we do have a support at $18.50, very close to statistical mean at $20. So unless I'm day trading, probably not a level I'm paying attention to because you can't get a great risk to reward on that. So from it would be the $15 level, 13. 10.50. These are really the key levels I'd be paying attention to, because from here, you know, we have a $20 target. So even from this $15 level, we have about a 5-point upside, and you know, we could have about a point stop on there. So definitely can get some good risk to rewards on there. But overall, to me, this is something I'd prefer to catch short bias again, like we were talking about, around that $34 level, just because I think the main reason this stock is squeezing is mainly just because its ticker is AI. You know, we do sort of massive move on here, and this was mainly down to its name. Again, we got that second move on there. So if we end up trying to do that once more, again, don't think it's really going to hold. So definitely going to be short bias on there. The way I will probably trade it is get short the shares and buy the calls. So again, we have then that defined risk, or if the options are quite liquid, we can look to go and pay a credit or debit spread. You usually get about 1-to-1 risk to reward on that play, but then you can pick your own expiration. So I could say in 3 months from now, we will be below $35. If we are, let's say we risk $100, I make $100. If we're wrong, obviously we lose at $100. But for a 1-to-1 risk to reward, we can pick a time frame. If a stock is kind of just moving on hype and it's most likely going to be short-lived, again, that's another great way I like to be playing these opportunities. If you enjoyed the breakdown on AI, let me know if you're currently trading it or holding it. If you enjoyed the video, why not drop a like and subscribe? If you want your own stock analyzed, throw that in the comments. And if you enjoyed the video, why not check out this analysis video?